China and the U.S. are reportedly very close to finally signing a Phase 1 trade deal. But before Xi Jinping will sign, he is looking for the U.S. to roll back tariffs on up to $360 billion worth of Chinese goods, according to new reports out this morning. Our friend Jessica Smith is live in D.C. with the latest. Jess?
Well, there's a lot of different reporting out there this morning, but the main takeaway is that China is pressing the U.S. to remove tariffs in order to nail down the Phase 1 trade deal. The Financial Times reports that China wants the U.S. to remove the 15% tariffs that went into effect on September 1st. And the Financial Times reports the U.S. is considering doing that. Now, it's not clear yet if President Trump plans on canceling the tariffs that are set to go into effect in December, but that kind of has been the expectation, because if the two sides are going to come together for this deal, another round of tariffs wouldn't really help move forward. But now it looks like the Chinese want more. The FT reports if the U.S. does give in on the tariffs, then the U.S. would want more from China, including more certainty on ag purchases, greater IP protection, and then a signing ceremony on American soil. Dan?
Jess, as I understand it, there's also a big tech hearing today on Capitol Hill. I feel like I say that every week. And I'm sure China will be a big focus, including the acquisition of that app TikTok, which I know is under the microscope.
Right. This hearing is going to be led by Senator Josh Hawley, who is one of the most vocal critics on big tech and one of the most vocal critics of China. So this hearing is going to be focused on a couple things. First, American businesses doing business in China, and then Chinese businesses operating in the U.S. and potentially collecting consumer data. That's the issue here. Senator Hawley has been on our air saying that he's very concerned about U.S. companies kind of putting Chinese profits in China over U.S. values. So we expect that to come up quite a bit. TikTok and Apple both declined to testify in this hearing today. Hawley tweeted about that, saying, "I've invited Apple and TikTok to testify on Tuesday about their business in and with China and the risk to American consumers. So far, they are both refusing, something to hide." Now, he called the decision a mistake in other tweets and said in a press release that he's going to have chairs for TikTok and Apple at the hearing today. So expect a little bit of public shaming. In a statement to Yahoo Finance, TikTok said that it appreciated the invitation but couldn't provide a witness on such short notice. A spokesperson went on to say, in part, "We remain committed to working productively with Congress as it looks at how to secure the data of American users, protect privacy, promote free expression, ensure competition and choice among internet platforms, and preserve U.S. national security interests." We did reach out to Apple as well, but we did not hear back. This hearing starts at 2:30 this afternoon.
And Jess, obviously we've had a lot of tech hearings over the past couple of weeks and months and years. I mean, is there any evidence that any progress has been made after these hearings to accomplish any of the things that are talked about, or is it just sort of political noise at this point?
At this point, there hasn't been any real movement. There have been some bipartisan bills introduced, but nothing that is really gaining traction or really moving anywhere in Congress on the House or the Senate side. So these investigations will continue. We'll have more hearings. We'll see if they get anything done eventually.
All right, Jess, thanks so much.
Of course.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.